Myth: insurance company with high claim settlement ratio is good. Or should I say, claim settlement ratio is the wrong parameter to look at. Do we exactly understand what is claim settlement ratio in insurance? A lot of people just look at claim settlement ratio and make an opinion about an insurance company. What is claim settlement ratio? Claim settlement ratio is the percentage of claims paid in a financial year, which equals to the ratio of number of claims paid to the number of claims received. So, if a company gets 100 claims in a year and they approve 95 of them, then its claim settlement ratio for that year will be 95%. It's usually the first thing we notice on any insurance company's website these days. If we don't pay enough attention, it's easy to assume that the claim settlement ratio is a simple metric that shows the probability of our claim being approved by the insurer. But this is a dangerous mistake to make. If we base a company solely based on claim settlement ratio, why can't we blindly go for a company with the highest number? Why are there so many companies in the industry? Try being informed instead of just opinionated, because claim settlement ratio is not the right parameter to look at. The claim settlement ratio higher than 80% is a good claim settlement ratio. When we consider an insurance company, there is no good or bad company based on claim settlement ratio. All the companies or underwriters are governed by the same rules and guidelines set by the Insurance Regulatory and Development Authority of India. And it is not like one company has all happy underwriters and the other company has all grumpy underwriters. If the claim has no inconsistencies, it will be accepted by all the companies. And if there are inconsistencies, they will be rejected by all the companies. It's about the number of claims and not the amount of claim. What type of claims are considered in claim settlement ratio? Generally, most of the people willing to buy a term plan look for this ratio as they are concerned about the claim getting paid in case of their early death. But claim settlement ratio is not same as death claim settlement ratio. In calculation of claim settlement ratio, all types of claims are considered, like death claims, the claims once the policyholder dies, maturity claims, policies which are maturing and needs to be settled, or surrender claims, policies which are closed prematurely and surrendered. Is claim settlement ratio a probability? One of the biggest myths about claim settlement ratio is that it's a probability of claim settlement. People mostly have a very bad view of companies and attribute these rejections to their intentions, which is not true and often leads to misjudgment of an insurance company and is not a correct way to look at this ratio. It is simply a way of representing the data and nothing else. It does not tell us about the intention of the company. Claim settlement ratio just tells us about what kind of claims did the insurance company receive and how many of those claims were rejected. It's not a probability. What the claim settlement ratio is not telling us: ratio of valid claims paid to valid claims received. A claim settlement ratio does not show how many valid claims came in and how many valid claims were settled by the insurer. There are instances where the insurer settles fraud claims too. The claim settlement ratio doesn't show us whether the claim settled by the insurer is valid or not. A good insurer has strong financial control. It is their responsibility to segregate valid claims from invalid ones. A good insurer might end up having a bad claim settlement ratio in a given year if they come across several fraudulent claims. Does claim settlement ratio depend on the policyholder? Yes, most definitely. A claim will be rejected or accepted depends mostly on the policyholder itself. There are many people who file a claim which is bound to get rejected and it's not valid as per the terms and conditions of the policy document. Many policyholders also have a very vague and wrong impression on what is covered and what is not. They file claims based on flimsy assumptions and for things which are out of scope of rules. Let us understand this with an example. Imagine a person who lied to the company while taking a term or health insurance that he is a smoker and also went through some surgery in past. He lied to the company. After some years, the claim was filed. Person died or got hospitalized. And now company finds out the information provided by the insured person was false and hence the claim should not be paid in this case and it is a totally valid rejection. So here it's not the company who had wrong intention but the customer who created a situation which led to the claim being rejected. Most policies which are rejected fall into this category. We have to understand one thing. If we have bought our policy properly and revealed all the information properly, our claim will not be rejected under any circumstance. However, if we give reasons for the company to reject our claims, it will surely be rejected and there is nothing wrong with that. What is claim intimation ratio? The claim intimation ratio is a more relevant metric compared to the claim settlement ratio when evaluating the performance of an insurance company. Claim settlement ratio tells us about the number of policies, whereas claim intimation ratio tells us about the amount. Claim intimation ratio is the percentage of claims that are reported to the insurance company within the specified time frame. Claim intimation ratio equals to the ratio of amount paid to the total claim amount. Most of the people are not aware of this ratio and this gives us a better clarity about the claims paid by a company. It may happen that a company has high claim settlement ratio but its claim intimation ratio is lower than the other company. Here is an example of how claim settlement ratio can be high despite of low intimation ratio. Company A and B receives 10 claims in a year as follows. One claim of 1.1 crore and 9 claims of rupees 10 lakhs each. Claim rejected for company A, one claim of 1.1 crore and claim rejected for company B are two claims of rupees 10 lakhs each. The claim settlement ratio for company A is 90% and claim settlement ratio for company B is 80%, whereas claim intimation ratio for company A is 45% and claim intimation ratio for company B is 90%. Claim settlement ratio for company A is high but not the amount paid, whereas the claim settlement ratio for company B is low but the amount paid is higher. An insurance company has to verify each claim and accept and reject the claims which are not valid. If they start paying each and every claim without proper verification, it's not in the customer's interest. This simply means that a company with not the best claim settlement ratio in reality is a good company because does not let a fraudster make a wrong claim. For instance, a new insurance company will mostly be getting death claims in the starting 8 to 10 years and not any maturity claims. which means their claim settlement ratio may look on the lower side. Section 45 of Insurance Act will guard us. According to Section 45 of Insurance Act, no policy of life insurance shall be called in question on any ground whatsoever after the expiry of 3 years from the date of issuance of the policy, or the date of commencement of risk, or the date of revival of the policy, or the date of the rider to the policy, whichever is later. Even if we shared wrong information or hid some material facts, then also it is purely life insurance company's responsibility to dig deep and find out faults within 3 years only. After 3 years, they cannot question. Common reasons for rejection of life insurance claims: mentioning false information in the application for a life insurance plan, or not paying premiums on the due date or during the grace period, or causes of death that are not covered by the insurance policy, such as suicide before the completion of the first policy term, or accidental death caused by overconsumption of alcohol or drugs, or a fraudulent claim made by the beneficiary. How to buy an insurance policy? Always fill in the form honestly, so there is no inconsistency that becomes a reason for our claim, delay, or rejection. Remember, we won't be around to offer an explanation. Go through the claims process even before buying the insurance plan. Make sure we are doing everything right to keeping in mind the end goal, which is a smooth claim. Take our nominee through this process. Give them access to all the documentation they'll need so they are well prepared for a situation if and when it occurs. Here are some tips. The claim settlement ratio is not an effective measure of whether or not an insurer is a good one. Look at a company whose name we trust. Choose a company which has been few years old. Choose a company whose product we like or features. Check out the experience of other investors online about company. Buy a policy with full honesty and by disclosing all information. A high claim settlement ratio does not guarantee that our family will have their claim processed for sure. Don't lose sleep over claim settlement ratio. At the end, claim settlement ratio is not a useful metric for any purpose, and we should not lose our sleep over it. Don't worry too much about it. May the force of understanding claim settlement ratio be with you. Please go through the description for the sources for this presentation. I've shared the link to my next presentation, Aditya Birla Sun Life Insurance, Protecting Our Financial Future, at the end of this presentation. And do not forget to check out the playlist for more presentations. If there is something to gain and nothing to lose by asking, by all means ask. Thank you for taking the time to watch this presentation. I sincerely appreciate it. Namaste.